Mark, we got a piece here from Bloomberg Opinion. It's titled, Why Boomers Have More Money Than Everyone Else. Well, why do they, Mark?
It's probably what you would expect, Chuck. We joked a little bit about it during the break. They own homes. They bought their homes at relatively cheap prices, and I know if you're in that age group, you're scowling when you hear this. You earned it, and the fact that homes have gotten a lot more expensive relative to incomes and every other measure is not because you drove the price up. Of course, it's just the nature of a growing economy bumping up against natural limits on some things like housing supply when we zone the way that we do, et cetera. So you bought a house at 2 times median income. Now it's 4 or 5 times. You bought stocks for most of your career at a PE. We were talking about this in the last segment. And by PE, I just mean valuation, specifically price to earnings in this example, though you could insert other variables in there and come to the same conclusion. You bought stocks relatively cheaply, and they've run up by a lot. So baby boomers and older Gen Xers, to an extent, have been the beneficiaries of rapidly appreciating asset prices. And maybe there are some cultural factors there, too. Maybe they were better savers, didn't have as much student debt, for example, though the researchers, I think, who conducted the study referred to in this article did not find that student debt, if memory serves. It's been a couple weeks since I looked at this, but if memory serves, student debt was not a big factor. But there may be other little factors explaining the relative difference in, say, net worth at this point in their lives of boomers versus other generations.
Now, the other thing is that, and I come back to this quite often, if you looked at all the literature written on millennials 10 years ago, in 2015, it was, millennials will never amount to anything financially. They're well behind their parents and Gen X in terms of where they are at the same point in time. They're not buying houses. They're not doing anything. They're just, millennials who are avocado toasting their way through life. And in the last 10 years then, equity markets went nuts, housing markets went nuts, incomes for millennials, moved up pretty significantly. And now you get the pieces talking about, hey, millennials actually have, a higher rate of home ownership at the same age than their parents did. And millennial wealth has caught up in this and that. And gosh, what a difference 10 years makes on this stuff. And so I think that all we get at when we look at these studies and these pieces, they're snapshots in time. They don't say anything about, what got you here, which you've outlined a little bit, but they also don't say anything about where you're going and whether or not the trends that got you there are going to continue. And, I think that ultimately when we look at this, and look, the other thing to point out here, even amongst the baby boomers, there are vast disparities in wealth. Guarantee you, there are plenty of baby boomers that are listening to our show right now saying, Chuck, I'm, a boomer. I'm not comfortable financially. I'm struggling to make ends meet. There are plenty that fall into that category as well. So I think that when we look at this in the aggregate, we also, kind of lose some things here in terms of the actual meaning of this. But I don't know. I caution people to read too much into this because, if just to use the boomers as an example, if you ask the boomers back in, 1979, hey, how have things gone for you financially, in adulthood? Most of them are probably like, yeah, this whole economics thing kind of sucks. Inflation's been high, jobs have been hard to get, gas prices have been high. The first 10 years that boomers were in the workforce were not exactly an easy time for them. Were the subsequent 40 a nice tailwind that they could ride? Absolutely, but again, these are just snapshots in time. It doesn't mean that those trends are going to continue.
Yeah, and if our institutions continue to deteriorate, and change is a better word. Maybe you like these changes. We talk a lot about Fed independence, and I keep bringing it up because it's critical to the growth of to the volatility of, and therefore the growth of the economy. These old trends that we like to extrapolate from, those trends are the product of the conditions that prevailed since the end of the Second World War. Trade liberalization, Fed independence, stability, rule of law prevailing generally. If we're switching to more of a personalist type approach to being governed, and maybe you like that, maybe you don't, I don't think you can assert, if we make fundamental changes to the rules governing the operation of our economy, that it will grow at the same rate. And I don't think, based on the experience of other countries, you can credibly make the argument that it will grow faster because that's not happened historically when, for example, a politician controls the money supply.